do you work with investors? They're all going to say, oh, every real estate agent's going to say yes. Like, you know what I mean? Don't ask a property management company, are you a good property management company? Like, yeah, we're the greatest ever. That's obviously going to be their response. It might not sound as exciting to everybody else, but I promise you'll get some things out of today's meeting. I don't know if everybody's super like, you know, like wakes up in the morning and thinks insurance, but I know, but we have two people that do that. So we'll get to them here in just a second. Essentially, people that haven't been here before, we do a thing called housekeeping. Anything that you've done or purchased or sold with real estate over the past month since our last meeting or the last time you've been here, we would like to know about it. So is there anything that you've done recently with real estate? Go ahead and raise your hand and we'll go over that because it's just great to hear people progressing essentially. You want to start us, Greg?
Oh, okay.
Yeah. Oh, I just know you have something because you posted about it and it looks great. So
7 months ago, I bought property on West John and finally finished the rehab on it and finally listed on Airbnb for stays. And it's really close to Carolyn Park, so we coined it Carolyn Cottage. It's got a lot of historic elements in it, and we're really excited to get it going.
Yeah, I saw the post online. It looked, if you guys go like see Greg Allen online, like it looks really good, really good. You guys put a lot of love into it. I mean, it's where'd you guys get all the furniture and everything from? Was it like secondhand or was it? Yeah. Perfect. Yeah. Perfect. That sounds great. Anybody else do anything in the recent? And then also of recent, I don't know, where's Kelsey at? The rates have probably gone up a little bit of recent. I saw Greg's email as well, but I'm doing some refis on some properties that were like essentially BRRRR methods and stuff, and those should be done end of the month. But I got a 5.65 and 5.75% interest rate. So just keep an eye on it. There are the abilities when they drop down to get some refis going and everything. So that BRRRR method is definitely still alive. So does anybody else have anything that they want to add on properties?
I won an online auction the day before Thanksgiving, and finally got the title deed.
The results of that?
Yeah. So it's just a Huber North ranch, 3-2, got for like 104. Probably put a raccoon popped out of the roof today. Yeah, a little pet.
Yeah.
So,
Yeah. They're
so
cute when they're young.
Should be able to rent it for like $1,400.
Great. Fantastic. So before we get started, last month we kicked off Launch, which is our group that meets outside of this meeting. And it's a smaller group that goes over deals and runs numbers. You learn how to run the numbers and do the deals. And if you are hesitant to like buy properties, we kind of give you a little kick to get you over that edge because you've got 4 or 5 people in the room with you going, hey, that's a good deal. I would buy that too. So it gives you a little bit of push. So we're doing that every other month. So this one, it should be like what's our May date, Jordan? Do you know our date for May?
For the happy hour or the one?
Yeah.
Okay,
so it will be either end of that week or the start of the following. So if you're interested in doing that, we'll have people sign up, and it usually is like 4 to 5 people. And it went really well this last time. We had people writing offers after it and everything, and everybody, learned about the specific properties that they wanted as well. So, let's get started on our topic this month, which is insurance. So I'm gonna have you guys introduce yourselves, how long you've been in the business, why insurance, like what gets you up in the morning about insurance, and let you go from there.
My name is Sam Weddle. I'm with Firehouse Insurance. We are independent agents. We have 35 different carriers to go through and quote from. My insurance background, I started at State Farm. It's kind of a bad word probably around here. But so I started out in beginning of 2019, went through, quickly fell in love with it. It's not what I was planning on doing, but very much fell in love with insurance, as nerdy as that sounds. Me and a couple of my other buddies, they were working at Liberty Mutual. And so we all decided we're done with corporate life and kind of left and started our own agency and started Firehouse in April of 2020. Tomorrow is our 3-year birthday, actually.
Congratulations. That's awesome.
And we've just been, on the grind ever since then and building our agency from scratch. And it's been an absolute blast going out, meeting people like you guys and going out and doing things like this.
Great.
I'm Brianna Douglas. I'm with JM Insurance and Financial. I have been at the agency
for 18 and a half years. I actually just needed a job. My friend, his dad at that point in the agency, is retired. Jack Wright is now our agent. Little did I know that I stepped into what I was meant to do. I love with my renters. I love working with my realtors. I love helping my clients so that they understand coverage and finding a good solution and just kind of getting things moving with purchases, whether it's investment, property, homeowners, auto, renters. There for you.
Absolutely. So, and I've talked to all of them on the phone before about in properties, and you can really see the passion about it as well. We've had deals where they weren't going very well, and we figured out solutions. We've had one of recent that was a doozy and stuff. So yeah, you got to find someone that has passion about it and also understands the investment side, because it's different than your personal home insurance and stuff. So let's start with that. What would be the reason why investing would be just different? Investment insurance, like for your properties, would be different than just investing on your personal homes. Yeah.
I mean, as far as, rentals go versus your own, when you go and build your own homeowner's policy that you're living in, there's a lot of things that are already built in there as far as your personal property, your lots of use, things like that. As far as your rental properties go, your personal property isn't in there as much as there's probably your appliances, maybe some furniture if there's an Airbnb, things like that. And so you manually got to put that in. And there are other differences as far as water backup coverage, maybe one. There's some carriers who won't let you put 20,000 on there like you would on your home. There's some that probably won't let you put it on at all. When it comes to the risk, it's just dramatically different if you're living in there versus someone who doesn't actually own the home or care about taking care of your home living in there as well.
It's a non-owner occupied. I know it's something we come across a lot, honestly. It's, oh, my kid lives there. They're not paying rent. You don't live there. So having a homeowner policy for that can actually hurt you if you have a claim, because they're going to ask, right? And then they're not paying anything. So landlord or not owner occupied, it's going to make a difference as far as, one, is it short-term rental? Are you going to do like an Airbnb, or are you going to have a tenant signing your lease? Those are things that make a big difference for what you have coverage-wise too. Also, as you start building your investment portfolio, cost is a little bit more expensive than standard homeowner, but cost is something that shouldn't really be important to you guys. It should be important to have coverage if you need it. Loss of rent, that is another huge thing with your landlord policy. You want to make sure, let's say there's a fire, your tenant can't live there for 6 months, but they plan on moving back in. Well, what happens with that rent, right? You want to make sure you're recovering what you're losing in long term too.
Yeah. So what I've talked to them about is essentially, I think there's a misconception when you're having insurance. It's more like, what's the minimum? It's, I'm worried about just the water heater break-in and urine in the floors, and it's $7,000 and all that kind of stuff. That's really not what they should be worried about, correct? They should be worried about the complete losses. You get tornadoes or hailstorms or whatever it may be. Like, they're more worried about the big ticket items and not really worrying about the smaller stuff. So that being said, deductibles, like, where do people, where's the happy median? Where's what they should do? You guys can just take it from there on that.
I mean, it all kind of depends on what your goals are, what you want with it. I have a lot of clients who own multiple properties or bigger apartment buildings where they're not going to claim something if it's $1,000. They want to kind of save some money on it. If they have enough cash on hand where they can fix something, they'll do a bit higher of a deductible. But what they love is the liability aspect of things, where they'll love higher deductibles, higher liability. Basically, their whole goal is, I just don't want to get sued if my tenant walks out and slips down the stairs because I didn't shovel the walkway. That's basically one of the biggest parts of that. But it all depends on what your goals are and, kind of also what you can afford as well.
And I agree, as far as liability is huge, right? You got to protect your assets. One, make sure you put your property in an LLC. If you're not living there, protect your personal assets. That is the best way, is leave it in an LLC. Two, with the policy, having your insurance as a maintenance policy is not a good option. And as Sam mentioned, you got a couple $1,000s of damage, pay it out of pocket. Insurance is there for catastrophic. Got $10,000, $15,000 of damage, file the claim. But if it's something you can just pay for, pay for it. As you build your portfolio, start looking at those higher deductibles. People who tend to own, I've got quite a few investors that I insure multiple properties. We're honestly looking at typically a minimum of $2,500 deductible, honest up to $5,000. Make sure you have it in your bank. Make sure you have access to that money. Don't just save yourself money on a premium and have this high deductible if you can't afford it, because then you're putting yourself in a bad position as well. But building that portfolio, building that savings, building that cash fund, use the coverage for what it's there for, and that's the catastrophic. And little things, pay it out of pocket. Equipment breakdown is an option you can put on your policy. Your furnace goes out, the water heater goes out. Well, if you can afford to pay it, honestly, pay it. Use it for those big things.
So Brianna and I had a client who bought a property in the west side of Dayton, which is perfectly fine, but it was about 220,000. I think the property was.
Yeah, not
Like
very-
it was like a 4 unit for 220. And he calls me up one day. He's from California, and he's like in a panic. I can't afford this place anymore. The insurance policy is like $3,500, and I'm like, how is that possible? That the insurance policy is $3,500 on this place. Well, he had full replacement costs. Well, what happened was the replacement cost was like 600 grand. Well, like if this thing burns down, like he's not building a $600,000 place there around $200,000 places. Like it's just not going to happen. So if you want to speak on that, on like when they're looking at their policies and they're looking at buying that next property, when is it good to get replacement costs? And when is it like, hey, we should just stick with the sales price and cover that? So if you guys want to take it from there on that.
I mean, essentially, you know, at the end of the day, I understand cost is a big part of your portfolio. Cost as far as what you're recouping and making, you know, income on your investment. But if you have no intention of rebuilding that property, only insure it for replacement, right? Why pay for something you're never going to see? It makes no sense. So we have options to insure it for like a market value. You have no intent to replace. You're paying for replacement. Still not getting that 600,000. You're only going to get what that actual value is at the time of loss. So there are ways that we can still cover you, give you great coverage, but it's not going to cost you an arm and a leg out of pocket. That was the most worrisome day when I get a text from Ryan when he's out of town, and I'm like, And so a 40-minute phone call later with a client, we were able to provide a solution, explain literally step by step what we were doing, why we were doing. We adjusted everything to make him happy, give him what he needed, and get him closed on.
Yeah, absolutely. It was interesting because like I mean the numbers really didn't work. I mean, that was the difference. But at the same time, I don't feel like we're exposing him to any harm because it's going to cover his loan. It's going to cover everything on it if there was a catastrophic situation, an event, and everything. So I'm going to, just to keep everybody involved, like I'm going to open it up. Does anybody have any questions on insurance?
Lively bunch.
Yes, I know. Don't everybody jump at once.
What should we be asked?
Talking about renter's insurance, is there anything you guys being in the industry would want in a renter's insurance policy? My understanding is like renter's insurance is just going to be there for long. Is there anything above and beyond that that you guys recommend mandating or requiring to be in a policy for a tenant?
Make sure it's in your lease agreement that you're listed as an additional interest, right? When we buy a house, the mortgage company is listed on that policy. So everything about that policy, cancel notice, gets sent to mortgage, right? Do that for yourself. That way you know if they're breach of lease. Require renter's insurance. Make sure you're listed as an additional interest. You know what it costs?
And by me, you're saying like the LLC that.
Yep. And that way you're protecting yourself. You're protecting your lease agreement. You're notified if they're breach of lease by canceling, you know, if they don't pay it. It costs nothing. And renter's insurance is so cheap. It's you know, it's helping you from filing frivolous claims that they're responsible for on your policy. So it's also protecting the rate.
Would you say like most renters expect to have to get renter's insurance?
It kind of depends, yeah. I mean,
Yeah.
a lot of people are requiring it. I mean, renter's insurance is a bit more than just their belongings, so there's a liability aspect of that as well. And so, let's say that they set your house on fire. Their liability can go towards rebuilding your home that you have for them as well. That's a huge part of what she's saying as far as protecting yourself and making sure your insurance is going to cover it and your rates are going to go up.
Yep.
There's a usual amount there that is requested in rent policy for liability. Like there's usually like a general amount that think of the owner that they're covered to a certain extent.
I think it depends on the place that you're in.
Mhm.
Like, say, where I live down in Cincy, in some of the not great areas, I mean, they just want to see 100 grand, right? But here's the deal. If you're living in an apartment complex or even a house where the rebuild on, think of worst case scenario. And I look at catastrophic, right? You're cooking dinner, that place catches fire. Is 100 grand going to rebuild that place? My minimum for liability on every renter policy on every property is 300,000. That is my minimum. That's my standard. So I always recommend 300,000. It is a whopping $53 a year. It's going to vary per company, but again, at the end of the day, when you're talking to the client, it's not costing them anything. We're making sure that they're covered. We're making sure you're covered. So I typically recommend a minimum of 300,000.
It's like $10 a month for them to have. Like
it's
and we have multiple carriers that will go in and quote through. So we have a lot of carriers who will get pretty hefty discounts where if you as a landlord are requiring your tenants to carry renters.
What questions going in? Because a lot of people, they manage their own properties, which like Alex he manages his own. He needs to understand like what needs to go in his lease. For people that have property management companies, like what do we need to ask them to make sure that that person managing our properties is doing the right thing when it comes to liability and insurance and everything like that? Because not all management companies require renters insurance.
I would make them require
They
it,
should.
honestly.
Yeah.
Put that in your contract that you set up with your property management company along with your lease agreement. Because at that point, you're now protecting yourself and you're protecting, your tenant and your property manager. So I would definitely set that with your property management company and say, hey, look, this is important to me and I need you to start requiring this. So that way you can set it to come to you. That way you're notified.
So I've been fortunate and lucky enough not to ever have to buy it.
Wooden doors.
Yeah. You said that earlier too.
My next question is, when do claims start to affect your premiums? How many claims can you have before you see a drastic increase? And I do have a second question, and it's about claims on roofs. Like, I see a lot of those seem to be very, very common. I didn't know if you had an insight, like, I have a few rental properties probably due for a new roof in the next 5 years, I would imagine.
Mm-hmm.
Like, what does that look like? How does it affect your premiums when making that type?
Great questions. As you know, with the shift in insurance and the shift in the market, storms, every insurance company has taken a rate change in the past year and a half. It's inevitable. It's going to happen. Personally, my rule of thumb, if you can afford to pay it out of pocket. Now, I have a house that I've lived in September of 11. My roof, when we moved in, original roof, as far as, probably 15, 20 years old. A couple years ago, I did have a missing shingle and I had that fixed and repaired. This last storm we just had, I've got quite a few shingles missing. I've got some gutter damage. Now, I know my roof is older. I know it's my job as a property owner to maintain my home. If I file a claim, my insurance company is going to laugh. And they're like, we're not paying this because you didn't take proper measures to maintain. So I literally today, my roof was finished. I had a new roof put on my home, right? So now I can update my roof age on my house. I can update my coverage and now I have full replacement. Whereas before I had depreciation. Every single company is different. Every company is going to have different deductibles for wind and hail. They're going to pay different depreciation versus replacement on age of roof.
So if your roof's 30 years old on a 30-year roof and you call them up, they're going to say
pretty much
likely no.
We have some carriers that will still do replacement costs.
Yeah.
Yes.
Again, it depends on your company, really. I highly recommend you talk to your agent.
But let's say you're there for 5 years, right? 5 years in, you never made a claim, right? But you go to make that, they're going to replace it, right? At that point.
It depends.
Really?
Very case by case.
Mm-hmm.
I mean, as far as like what you said earlier, if you make a claim, when will your rate go up? Probably the first claim. I mean, I've seen it where, people have called in just to their corporate headquarters or whatever they were, and they just inquired about a claim, and then they put a $0 paid out claim, and it still negatively affects you, which is unbelievable. I hate it. But I mean, it definitely happens, which is the power of having, an agent to call and say, hey, is this something that's going to be covered? But I mean, on those roofs, I would definitely check your guys' deck pages and take a look and see, is this, an actual cash value roof or is this a replacement cost?
So before you ask for a claim, call your agent first and go over it. Don't try to go through them because it will ding you.
Yes.
So my rule with them, don't ever go through anything. Ever. Don't ever insure yourself through anything. Because anytime you call to even ask a question, you just have yourself a zero paid claim. So when you shop carriers, that pulls up as an incident. That disqualifies you or impacts what you qualify for. I actually had a customer today. They've got probably 15 to 18 rental properties insured with us. Fortunately, there was some water issues that they had. Don't ever use the term leaking. If it's occurred over a period of time, don't even call your insurance company because that's wear and tear. Sudden and accidental. That's what you're looking at, right?
So when you call them, don't use leaking.
Right. Never use the term
Yeah.
leaking. We do not like leaking, right? You tell me
Stop that a
leak,
month ago.
Yeah.
But essentially, here's what happened. They've got $1,000 deductible. The repair to the actual pipe is not covered, right? But the damage it caused is about $1,500. I can let them go ahead and file it, let the adjuster figure out what's going on, even if they don't pay anything. That now will affect them for every investment property they purchase after. I now have to count that as a claim, no matter if they paid or not. So after a conversation, we determined it's best that they not necessarily file that claim. It's going to affect claim-free discount. You can expect that to go high. You're looking at 1%, 15%. It's going to vary per company. You're also, depending on the type of loss, going to see a surcharge, right? Most times wind and hail isn't necessarily surcharged. So a lot of times it's catastrophic, right? Your first one, okay, we're going to take claim free away, but we're not going to hit your premium. Water claims, no, you don't want to file them. You're going to see a hefty surcharge. It lasts for 3 years. It can affect your discount for up to 5.
So question, where would be the threshold? Because like I had a Waynesville duplex, water heater busted, ruined all the flooring throughout the main floor. And I mean, it really pumped out some water and everything like that. I think there was about $10,000 worth of damage. Where, I mean, obviously I'm going to make a claim on that because it's 10 grand. But if that water heater busted and it only really messed up the water heater, maybe a little bit of a flooring, like I'm thinking, hey, let's just replace this. So there's always, I mean, even though it was water, there's still a threshold.
I mean, I would, depends on what your deductible is. Where, if it costs $3,000 to fix, but you got a $2,500 deductible, there's no point just $800 to $500. And
You're gonna hurt over time.
Yeah, your insurance is gonna go up, I don't know, $100 next year, and then probably every other year after that, it's just gonna pay for itself. Yeah.
So for property Michael, yep, go.
So
Yeah.
how many units under one roof does it take in order to get a commercial policy where the loss runs stay with the property and not with the individual that's insured?
It's always going to stay with the individual. They're going to be able to see that. So when it comes to commercial,
So yeah, I mean, there is a size where it doesn't stay with the individual. It never does. Like when you get apartments, things like that. I was just curious how many units.
It's still gonna run with the person.
yeah, so when it
Doesn't
goes
matter if
into
it's
commercial, it's over 4 units. So anything 5 and up is going to be commercial. So this is pretty much what I do. I do a couple Airbnb single fans. I mostly do apartments where if you have it in LLC, they're going to require loss runs. If you've had apartment building for 5-6 years, you're going to buy another one. They're going to ask for loss runs. Or if you've had it,
No, person.
so I mean, they'll take a look at it.
Maybe it's different in Ohio.
It's very state by state. I know you were saying last time you had one like Arkansas or Oklahoma.
Or yeah, so Oklahoma, I don't know. I'm just curious because like there, when you have a commercial policy, the loss runs stay with the property. So you can claim as much as you want on that one property, and you'll increase the premiums on that one property. It won't affect any of my other properties because the loss runs stay with the property, not the individual. I was just curious, like what state? I'm assuming it's over 4 units.
Yeah, so anything over 4 is going to be a commercial building for you. And then, I mean, are those buildings in different states, or are they in the same state of each
No,
other?
the same state.
Are they in-
We have all different LLCs.
They're in different LLCs. Okay, so then that's probably why you're getting that. So if it's the same LLC that you filed a claim with, and then you're going to get more properties from that same LLC, they're going to see the loss runs into your company.
Yeah, and another thing too, just to kind of remember that was like it was over 4 as well. Like from what I understand, it's like from my experience, is that if they're having a fire on the property ever before, it stays with the property. So if you're coming and buying this property, they require insurance carriers, at least in Oklahoma, maybe 7 somewhere else, but they require loss runs on that specific property. So if there's been a fire 10 years before you got there, guess what? You're trying to insure it, that loss runs on there, and you're getting never impact.
It shouldn't because it's the prior owner. And I think you're right. I think it depends on the carrier, and I think it depends on the state. So every carrier, they look for something different, right? Every single insurance carrier has a different appetite for the market. They're looking at different things. So what someone may look at as great business, another company may not. Everybody has different guidelines. I write a lot of business with American Modern. That's where a lot of my short-term rentals go. They actually only look back 3 years for claims. And they allow more water claims than what, say, my Allstate brand does. So it really is just dependent upon, I think, 1, the carrier. 2, honestly, it's going to depend on your agent, the education, and the experience, and how willing they are to look at all the loopholes for you. Like, I know personally, there's a lot of different things that I will try to find a solution to any problem that there is. Sometimes I've come, I think, across a couple times where I've like, it's just not good, right? But at the end of the day, a good agent for you is going to work hard to find a solution and find you a policy, and they're going to learn how to work those legal. I actually had one recent. They are 2 business partners that are based out of California. The property is written, it's 3 family, written in an LLC. So the one business partner actually had 2 property claims show up for his name. They are on an investment property, so I have to count them, right? Well, what did I do? I ran the property on the other business partner because those claims aren't popping. They showed up as an unmatched. It gave me a solution and allowed me to write coverage. Yes, I'm playing the loopholes, right? But I'm playing them the right way. And I was able to provide a policy to protect them. So again, it's going to depend on each and every individual situation.
I mean, I know for us, they'll have discounts for. I mean, roof is by far the biggest. When people call me and they're like, "Hey, I just got a new roof," I'm always like, "Let's go! I'm pumped. You're gonna get a great rate."
Yeah.
I had one today that I actually quoted. I mean, it's just a normal homeowner's policy, but I mean, she had everything regutted. The plumbing was 100% brand new, wiring was 100% brand new, and they said this is like a $400,000 house, 100% brick. We found a policy for like $900 for it, with like fully loaded everything. So like when you're brand new and you have all these updates, like there are some pretty serious discounts with those. If people buying houses, I always will ask, when's electric updated, when's plumbing updated, things like that.
So if like I'm taking these properties and I'm fully renovating them, and I've got to get them insured at first. after I'm fully renovated, do I call you guys back up and just say, hey, this is the things that we did. What's my new policy?
Paid invoice, signed contract with partial payment with estimated completion date. Those are typically your two things that you're going to want to send. Complete wiring, rewiring of the entire home, heating and air together replaced. They won't just usually accept one or the other. All renovated plumbing, and then roof. Roof is obviously the biggest. What I have found too, so like with some of our like Allstate landlords, if it's an older built house like 1920s, 1930s, or 40s, it doesn't qualify for replacement cost, right? Now, here's the kicker. You've had all those things updated in the last 10 years. Now you do. But you got to prove it. And it can't be done just by anybody. It's got to be a licensed contractor that does it. So these are things that can become important with wiring and siding and roofing. Something I have recently seen a lot of, especially with our investment properties, are asbestos material and knob and tube. Very, very few companies will write coverage, right? It's very, very, very difficult to find a company to provide coverage for those types of material. They're out there. They're paying premium big time.
So if we replace, if one house has had AC, furnace, and water heater replaced in a 3-year span, I have missed the opportunity to have.
It depends on how far back your company goes. I know we look at renovation discounts for up to 5 years. If it's been within the last 5 years,
That's fine. I'm just like, I guess I wouldn't like, roof makes sense, right? Like that's a structural thing that could lend itself to some sort of less liability. The house is in better shape, etc. But I just wouldn't have expected equipment or like, machinery and like that type of thing to be.
rule of thumb, call your agent. Like any kind of major update like you do to your house, call your agent and ask, right? It's a phone call for one. Two, you never know what the answer might be. And if you don't ask, the answer's always no.
I mean, I feel like taking out the 18-year-old kid would be less, right? To go to college. Little Johnny's going to ED down. Less.
But as far as updates go, I mean, you probably have run into this with apartments, is electrical panels as well as something that's getting really, really big. If you have like a stab lock panel, Zinsco, Federal Pacific, if you have those type of electrical panels, insurance companies will cancel that immediately. We have some carriers that will do it, but majority of the time, if they do, just like she said, you're going to be paying for it a lot. I mean, I am dealing with an apartment building that I insured a couple months ago. They just went to inspections and saw it and sent a client a letter. So even if you say, no, I don't have any of that, they're going to go and look and they're going to find out.
I'm running the Federal Pacific all the time on
Yes.
these rehabs.
And those fixes aren't cheap.
I mean, it's $2,000 now. But
Put a box in.
Find
Yeah.
yourself a very good electrician
Mm-hmm.
who's willing to work with you. And that's your best option. Just pull it and replace it. Like, and I've come across where I get the aluminum wiring. I get the question about, the electric panel. Ours is kind of a touchy situation, right? Because like I pull our inspection grids and what's acceptable, what's not. But at the end of the day, like with Allstate, I don't physically ask you what kind of electric panel you have, right? I ask you what kind of wiring. Is it 100 amp? Is it 200 amp, right? Here's rule of thumb. I didn't tell you this, but right, knob and tube. The biggest thing is when people call and they're like, oh my gosh, my house has knob and tube. I'm buying this home. Don't tell me that. Now I know. Exactly, right? Now I know. Knob and tube is one of the toughest things to find coverage. I have one company, it's a broker, it's Griffin. You get junk coverage, it's bare minimum, doesn't even have everything like a normal policy has, and you're paying expensive cost, and it's ACV. That's my only option. I don't even touch fair plan anymore because then you don't get liability.
Look at him getting all excited about talking about the yeah.
You get just fired up.
Yeah, look at him go. Yeah.
Yeah. Like, there's options like fair plan, they insure pretty much anything, right? It's like high risk auto insurance. There you go. Here's the problem. When you're renting it out, you get no liability. They don't even offer it. Now you can.
All right. Well, let's transition to being sued. So on that, like Jake Dotson, this is already settled, so he didn't really care if I would say this, but yeah. But Jake had a property where a tenant texted him and said, "Hey, I almost slipped and fell. It's kind of slick back here. Make sure we get some salt and stuff." And he said, "Okay, that sounds great. Glad you're okay." Like a couple months later, he gets a lawsuit on his doorstep, and it says, "I slipped and fell on this date and hurt myself. I'm suing you for medical expenses, trauma, whatever it was, and stuff like that." He looks at the date, then he looks at his phone, and he had texted that girl that day, and she said, "I almost fell." And that's what saved him from, canceling that lawsuit. But if he didn't have that text message, like he has really good coverage. So, it would have gotten a little bit messy, but at the same time, like those things do happen out there. So what's your guys' thoughts? Like for me, like I personally have a personal umbrella coverage that covers my own personal house and it covers all my rental properties and every asset that I own. I have a swimming pool at my house and I have a golf simulator. So people can, I guess, drown or get hit at a golf club. So I'm making sure that like I have a very nice, personal coverage, but at the same time, like what are you guys' thoughts on coverage that will also protect you against the tenants essentially?
I don't think any of us are going to say no to an umbrella policy.
Right.
Like, I mean, we're all going to recommend that. Yeah, I mean,
Essentially, one, again, put your property in an LLC because what you're doing is protecting personal assets, right? So, personal umbrella. I want you to take every bit of equity you own, 25% of your wages, all of your income, everything you've got sitting in the checking, the savings, any toys you own, motorcycle, quads, literally everything.
Chris?
And I want you to total it up, okay? That's how much liability you need to protect you if you're sued. Now, you got all these investment properties and they're in LLCs, right? So those are protecting your personal assets because you got an LLC. Carry a commercial umbrella. Protect yourself even further. You're spending money, but what it's doing for you in the long run for the I didn't mean to or the uh-oh, right? Because you never know when it's going to happen. I'd rather pay that little bit now than have to deal with it after the fact.
they're not expensive either. I mean, if you want a personal umbrella, I mean, we can find them for, $120. I mean, commercial umbrellas, I mean, I'm sure you guys with apartment buildings, I know $5 million commercial umbrellas, a couple $100 for the year. What's that versus getting sued for $1 million?
I got a question.
Yeah.
So I do IT work. I work at Google. Okay. But on the side, I was out of work for a few months. So I started doing like projects just to get stuff done. And I flipped a bunch of houses in Chicago. Anyway, boy, that's a long time ago. But I got the sign on the side of my truck now, right? And I was thinking, let's say there's an accident. This was just like a project. It was just when I'm hustling, right? I thought, what if somebody thinks like I'm wealthier at a big company? When I get, a little wreck, now I get sued. The company's got insurance, but it's not like you should get an additional rider or umbrella or something.
First, being the fact you have a sign on the side of
just
your
about
truck,
to say.
you need a commercial auto policy. That
Okay.
sign will hurt you in an accident because that company's gonna be like, we got a sign, it's business, yeah,
We're not
paying
covering
anything.
So it's incorporated, and I've got business insurance, but you say I need business auto insurance.
Yes.
Yes.
Okay.
If you're using it for personal use and it's a
Yeah.
commercial vehicle and you hit someone, they're not covering it.
Right.
It's all out of pocket
So
for
you
you.
need to make sure you have a commercial auto that also covers you for personal coverage as well.
He's gonna tend into it the whole way back.
I know.
Yeah.
Hey, brother, get that sign off there.
Yeah.
Also needs to be listed on your commercial insurance. So like for instance, if you're married, right? And you own your own business, you've got commercial auto, you don't have your spouse listed and they drive your car,
Oh yeah.
yeah, you're in a bad situation.
We're gonna have to talk. Thank you.
Yeah. So, I know you're familiar with Acuity, right? So Acuity is a company that we use a lot for commercial. And one thing that I'm sure a majority of companies do this, but they're really good with it. Where, if you have your business with them, you can put your commercial auto there. You can list it as personal use, add your drivers. So you can have it on your commercial property, on your, commercial policy, but also have an endorsement on there where you can use it for personal use.
So last question I have, and it's more of a comment. So those that use property management companies or, manage it themselves, but it's mostly people that use property management companies, make sure you have a discussion with them about like E&O insurance, their errors and emissions insurance. And the reason why I say that is when it gets really cold on December 23rd this past year and pipes start busting and it floods your whole property, and it's because the property management company didn't turn the utilities on and it was their fault and my coverage doesn't cover it, they better have errors and emissions insurance because one of their employees messed up. So just throwing that out there is like really have that conversation with people. Is I know it's a lot of what if then this happens, but it's a very easy question. Like, what if it's your fault and not mine for a big claim? And like my insurance company says, no, what's the case? Like, what's the deal?
It's funny you kind of bring this up because literally in 3 days I had 3 phone calls of fractured pipes.
Yeah.
A little bit of a different situation because they weren't investment properties, but yeah, I would definitely check on E&O insurance and make sure your property management company one is listed on your rental policies as an additional interest, right? Also make sure that policy provides coverage for your property managers if they are sued, because now they're going to sue everyone, right? So you want to make sure you've got that coverage. But like with the situations we had is, okay, so our clients did the inspection. Heat was maintained in the home, right? So ruptured pipe happened. They closed on the house. They go the day of closing. They turn the utilities on. They've got water everywhere. That's actually on the seller. They own the house at the time. The pipe's actually ruptured.
Time of loss is a big thing.
So did you have that conversation with the property management company by chance?
not before, but it was good that it worked out for me and stuff like that. But I didn't have that conversation before because I've never even thought about that conversation. So and so that's what. Well, yeah, I mean, it was more than the normal what if in this conversation. It was, it was a big deal. So yeah, but I mean, everything worked out and they did what they needed to do, which is great. But if I was like with my last property manager who was awful and didn't require renter's insurance and didn't require all these kind of stuff, if that mistake would have happened, it would have been on me. And honestly, there was like $80,000 in damage. So, I mean, that would have been on me. So, who you choose to manage your properties matters. I mean, it absolutely does, because those mistakes, the little things that they take care of, like renter's insurance, just because they're negligent on it and stuff like that, that's in the day is your fault. So, I mean, I was unlucky that it happened, but I was lucky in my situation because a year before that, I'd have been in trouble. Yeah, it would have been a lot of money. You guys would have been having water here each night instead of and crackers and stuff. So
how many people read reviews, before you go out to eat or before you purchase anything? I mean, how many people read reviews, right? You go to Google or you go to sites and you read reviews on everything. Every bit of your business, you should read reviews.
Mhm.
Talk to people, referrals, word of mouth. That is your best option. And again, always call your agent and ask. That's key right there. Call your agent and talk to your agent. They're a good agent. It might not always be pretty what they tell you, but the truth, that's what.
I'm big on asking real in-depth questions, even if it's a real estate agent, whoever covering your insurance, property management companies, whatever it may be. Don't ask, do you work with investors? They're all going to say, every real estate agent's going to say yes. Like, you know what I mean? Don't ask a property management company, are you a good property management company? Like, yeah, we're the greatest ever. That's obviously going to be their response. Asking these questions like, hey, what happens in your catastrophic event where you make the mistake and my insurance company doesn't cover it? Like, what are you going to do? And if their answer is up to par, then it's like, okay, these people have their stuff together. And if they don't really have a plan together for that, then I would run as fast as you can. Yeah.
I mean, absolutely. Go for Google reviews. Take a look at everything, who you're working with. I would even do that for your insurance agent. I mean, you'd be surprised the amount of people who will pull up their reviews, an agency on Google, and they'll have 8 reviews, and it's like a 3.5 star. You want to double check that. I know. So like we opened in 2020, we have over 435 star reviews on Google. So you want to make sure that you're going through and seeing someone who is actually doing business and whose customers are actually happy.
It's really amazing. Is everybody like who's on the Dayton Investors Network page? Are you guys, is anybody on that? So it's like a Facebook page that has like 5,000 members. And someone always puts on there, hey, anybody know any good property managers? And there's always like the same people that like, hey, so-and-so's good. They're like all individual property managers and everything like that. And I'm like, they're terrible. They're terrible. They're terrible. They're going to screw you. Like, you know what I mean? And in my head, because it's like, I know that they don't have systems in place for these questions. And so like for people to think that like every management company that you use are going to have the answers to this or have it set in place, it's not true. So really think about that. And then if you are managing the property yourself, like you need to have conversations, whoever your carrier is, on saying how I get protected, because you have no one to fall back on. It's all on you. Well, it's on your LLC, but still. So, but all right, great. Well, does anybody have any final questions before we wrap up? And you can use this great patio or whatever you guys would like to do. Does anybody have any other further questions? Where can they reach you? The folders, all that kind of stuff?
In the folders, I have a couple tidbits of information. There's a paper that goes over landlord insurance coverage. What's covered, what's not. It also has a paper in there about why you should require renter's insurance as a landlord. My business card is in there. It has my personal cell phone. I am 24 hours a day, 7 days a week.
Oh, don't say that.
I am.
I'm going to test that out.
Yeah.
I actually had a gentleman that paid cash for a property. He was, if I'm sleeping, I'll answer. But I did. I had an investor who lived in California, and he paid cash for property that day. At 11 p.m. our time, I was finding coverage on his investment property to make sure he was protected. So, being available 24 hours, yeah, you know what? Most people don't utilize it, but I want to make sure that I'm here. If it's a Saturday, I don't want you to call my 800 number. I want you calling me. You've got something that major happens. You've got a fire. Call me. I'm going to make sure you guys get taken care of the right way. I'm going to guide you to the right people. There's so much value with people who have passion in the business and what they do versus someone who's just going to write your coverage for a premium, right? They don't care. But my contact info is in there. do have a full team at our agency. With everybody there, we have Jeff on our service team, and we have Jack, our agent owner, Matt Kessler, our business operations director. We have Anna, Kim, Haley. I have a processor, Michelle, and another sales team member, Tracy. All of us combined have over 100 years experience in the business. So we are here to help. Very rarely do you get voicemail, but you always get a same-day call.
Absolutely. I didn't bring any materials with me. I do have a business card I can shoot out to you guys, though. I mean, I just want to leave you guys, take a look at your guys' deck pages tonight. Take a look at those. Make sure, they'll have it listed. Some of them will have, what percentage is your roof covered. Some will say 50%. You don't want that. Make sure you don't have actual cash value or ACV on your roof. Make sure that you guys have water damage on there. You have water backup of sewer and drain on there. Those are things that are going to protect you and help you not shell out a bunch of money. I know when it comes to me and insurance, my philosophy is I don't want you to call me and say, is this covered? And I have to say, no, it's not. But I could have put it on there, but I wanted to save you money. Not what we do, yeah.
Is that on homeowners too, or just on rental property?
Both.
Everything.
Both.
So I got homeowners policy. I didn't dig down. Is it likely that the auto policy I'm more familiar with, on the home I just figured it's covered, but you're saying I should really look at that?
What company are you with?
State Farm.
It's probably replacement cost then.
Probably a replacement, but your deductible is probably half to 1% of what your dwelling's insured for. That's another major change. Like you'll see that pretty deductible. Oh, I got $1,000 deductible. If you read the fine print that your wind and hail is 1%, if you got a $600,000 house,
pay Chris Paul.
you're
I'll
paying $6,000.
Yeah.
No, it's true. I mean, you know what? Whatever. I'll call someone out. Home site. Have you ever seen quotes from Home
Don't
site?
even.
Yeah, they love doing that. They'll put $1,000,
Yeah.
all peril deductible on there, but then they'll
1%.
throw on like a 2% wind hail. It's like, whoa, you don't want that. You definitely don't want to call and say, hey, I got some hail damage on my roof. It's probably $10,000 to fix. Oh, well, your deductible is $7,000. See ya.
And I mean, honestly, so what I would tell everybody is look at your policies.
Actually,
Look-
send them to me.
Yeah,
Or
and
send them to him.
that's what I was gonna
And
say.
let
Look
him
at your
review.
policies and let them review them. And maybe you came here and got a free drink, some sandwiches, and some saved money on your insurance service policy. So I mean, that's what I know we're going to be doing soon, going down through all my policies and everything, because maybe I'll be able to get more coverage and save some money as well. So that's the ultimate goal. And I will say, don't hesitate to call them. They are insurance nerds. I asked them questions earlier and they started talking to each other, and I just kind of slowly backed away because they started going. Yeah, I was like, well, it's nice out, so I'm gonna let you guys answer this with each other. So, but we appreciate you guys coming up here. We appreciate you sponsoring the day as well. So, yep, absolutely.
I think one thing as well is we do have a link as well. Like I know no one has their deck pages on handy. No one knows exactly where it's in order to come home and have a drawer for it. We do have a link we can send you if we have like online access to your account or like your mobile app. You can just fill it out and it'll just shoot me over literally all of your deck pages. And so I can just, take a look at it for you, make sure everything is square and match it apples to apples. It doesn't, if you have the best spot, you're in the best spot. But if not, there are
Great.
options.
That's fantastic. Well, hopefully you guys take this to heart and maybe save some money and have a little bit better coverage. So great. Hey, thanks guys. And then next month's is what day again? 16th. Bring a friend.
That one's all about like partnerships and forming
LLCs and all that kind of stuff. So great. I think we have some pretty good people there on the panel for this one, where it should be really good because
talk about like the legal side of it.
Yeah. like everybody wants to do partnerships and everything. It's always kind of fun to do this stuff together. So, we'll go over how to set up the partnership, what you should do when you come to a disagreement. I know Jake and I, in our bylaws, it says if we come to a disagreement, we have to flip a coin. We've yet to flip a coin, so we'll see what the odds are and everything. But I've been told it's 50-50. But yeah, so we're gonna go over like what you should be putting in the bylaws and everything. So we'll have an attorney here as well. So should be a great class. And then, like I said, bring a friend, maybe bring a person that you want to do a partnership with, because this will be a great one and a great place to start. So don't be afraid to reach out. If you lose their contact information, always contact us. We'll get it for you. And we can't wait for and if you're not on our investors page, get with Jordan and she'll get you added to our investors page. There's like 100 people on there. It's a private page. We post good deals on there all the time. And that's where people hear it first is our investors page. So yeah. Yep, absolutely. So if you just get with Jordan, she'll get you added and everything. But it's really nice because we'll try to add a house maybe like once every 3 days or some tidbits or whatever it is. If you have a question, you can ask it on that page. I will respond in video form and answer it because some people might have that question as well. So any other questions or anything? Nope.
Thank you. I hit turning now.
Perfect. Good. All right. Thanks, guys. Appreciate it.